Welcome back to Market Matters. In episode 12, we're diving into a critical topic, key events and how they impact the stock market. If you thought stock prices only move on company news, think again. Today, we look at economic and non-economic events that move markets in big ways. Investing based only on company-specific news isn't enough. Broader events, from RBI policy to global conflicts, can drive prices. Let's break down the key events every smart investor must follow. First up, monetary policy. The RBI uses it to manage inflation and economic growth. When interest rates are high, borrowing becomes expensive. Corporates slow down and markets may dip. When interest rates are low, spending increases, and so does inflation. Keep an eye on repo rate, rate at which RBI lends to banks. Reverse repo rate, rate at which RBI borrows from banks. Cash reserve ratio, CRR, funds banks must keep with RBI. All these influence liquidity in the economy and the mood of the market. Inflation affects your money's buying power. It's measured using WPI, Wholesale Price Index, CPI, Consumer Price Index. CPI matters most to us as consumers. If prices of essentials like food and fuel rise, it indicates rising inflation. RBI raises interest rates to curb inflation. This is why inflation numbers can swing markets. The Index of Industrial Production, IIP, tells us how industries are performing. Rising IIP equals good news for markets. Falling IIP equals concern for economic slowdown. PMI is a survey that tells us if businesses are expanding or contracting. Above 50, expansion. Below 50, contraction. It's released monthly and is a quick pulse check of economic health. The union budget is a once-a-year blockbuster event for the markets. Taxes, subsidies, duties, and policy changes are announced. Even small changes in duties can heavily affect stocks. For example, increasing cigarette tax might tank ITC stock due to lower expected profits. Each quarter, companies announce earnings. Markets react based on expectations. Beat expectations, stock may go up. Miss expectations, stock may fall. Infosys usually kicks off the earnings season. Always compare results versus what analysts expected. Not all market-moving events are financial. Wars, pandemics, elections all impact markets. Russia-Ukraine war impacted oil prices. COVID disrupted supply chains. Indian elections affect local investor sentiment. These events can cause sector-specific or broad market moves. So remember, being aware of these events helps you stay ahead of the market curve. In the next episode, we dive into how to read financial statements as an investor. Don't forget to like, share, and subscribe to Market Matters.